Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Thursday, October 6th. Stocks around the world continue to rally amid hopes that European policymakers will make a coordinated move to shore up the region's banks. The global buying spree was sparked by a report in the Financial Times yesterday that finance ministers were looking for ways to recapitalize the Eurozone's financial institutions. European Commission President José Manuel Barroso took it one step further today, calling on member states to help the banks get rid of any toxic assets they have. But a spokeswoman from the European Banking Authority denied a report that it's planning a new round of stress tests to gauge the impact of big write-downs on sovereign debt. We're seeing big gains across the board in the European markets. Frankfurt's DAX index and the CAC 40 in Paris are leading the way, both up more than 2%. Stocks finished sharply higher overnight in Asia as well. Hong Kong's Hang Seng Index soared nearly 6%.
We're also keeping close watch on the currency markets, following decisions on monetary policy by the European Central Bank and the Bank of England. The ECB held its key short-term interest rate steady at 1.5%, as most experts expected. But some analysts believe the central bank will take additional steps to support the banking sector. We're likely to hear about any new plans directly from ECB President Jean-Claude Trichet, who's conducting his monthly news conference in Berlin right now. Incidentally, this decision is the last of Trichet's 8-year term. Italian central banker Mario Draghi will succeed him in November. Meanwhile, the Bank of England surprised the markets earlier this morning when it announced another round of quantitative easing. The bank's Monetary Policy Committee voted to increase the size of its asset purchase program from 200 to 275 billion pounds. Following that decision, the pound is falling sharply against the US dollar and other major currencies. The euro is also losing more ground to the greenback, dropping below $1.33.
Despite the dollar's relative strength, commodity prices are rising. Gold is slightly higher at around $1,650 an ounce, and crude oil is extending its recent rally, moving back above $80 a barrel. Oil prices got a boost over the past couple days from reports showing a decline in U.S. fuel supplies, as well as a positive reading on the labor market yesterday. ADP reported that private employers added 91,000 jobs last month, raising hopes for a better-than-expected reading from tomorrow's government jobs report. Right now, economists predict that about 60,000 to 65,000 jobs were created after no change in August. This morning, traders are digesting the weekly jobless claims report. We'll bring you those numbers after the opening bell.
On the corporate front, Apple will certainly be in focus following the death of Steve Jobs. The passing of the company's founder and former CEO came after a long battle with cancer. Jobs stepped down from his day-to-day role at the company in August and was replaced by Tim Cook. Apple shares are dropping about 1% on the news. Another stock decliner in the technology sector is Yahoo. It's dropping more than 3% following reports that Microsoft may be considering a bid for the company. And finally, retailers are likely to get a lot of attention today as they report their September same-store sales figures. So far, Macy's and Target have posted strong results, while sales at Gap stores slipped another 4%. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.